Get started. Welcome, welcome, welcome. Hope everybody had a good trading today. There was lots of volatility in the markets, plenty of room to go up and to go down either way. And pretty much what we are discussing here today is the battle between the bulls and the bears and where we are currently in the market conditions. And so I'm hoping you guys can take out a lot from this. Again, we give out a ton of information over here at Sang Lucci and want to make sure you guys are being able to what's that word, glean as much as possible.
Yeah.
Before we get started, I want to make sure you guys, are we pushing this right now?
Yeah, let me jump in here and I'll explain.
Sure. Charlie of the Sang Lucci group has one word to say to you guys before we get started here. Give me just 1 second. What is going on here? There we go.
What's up, guys? Yeah, we always want to make sure you guys know what's coming up for us in the next week before we just keep you informed on what we're doing. So most importantly, before I talk about the classes that we're starting on Monday, we are doing an HFT roundtable. We're helping promote this with Benzinga. This is going down on Sunday at 7 o'clock, and it is going to be very, very good. For all of you guys that are always asking us about high-frequency trading and such like that, this is your opportunity to learn from the absolute best. They're going to have Chaim Bodek on there, as well as a couple other experts in the space. Starting up at 7 o'clock Sunday night. You can see I put the link right there in the chat. If you guys have any questions about that, feel free to type in the questions box and just say HFT Roundtable or HFT or whatever you want to say, and I will make sure you guys get all the information on that. But that will be very cool, so check that out. And yeah, most importantly, coming up on Monday night, Pete himself is launching his 4-day Introduction to Options course. We had our first session last month. It worked really, really well. A lot of people learned a lot from it and have stuck with us, staying with us in the chat and actually even gone on to our bigger course. So the purpose of this course is it's not about teaching you guys only the Sang Lucci methods, guys. It's about teaching you everything about options. Pete takes you through every single style of trading options or even using options to invest that you can imagine. So if you are thinking about getting into options and you're not sure that Sang Lucci and how crazy we do things is the right thing for you, this is the class to take. You'll learn how to trade options using various different styles. A lot of them using a lot less risk than we tend to put on, and then also you'll be able to learn how to use them for investing. One thing that you guys should know is the tuition you guys pay. It costs $250. Yes, we can do payment plans with that. But also, if you do this, we cut off this $250 towards the 12-day class. We have a lot of people who say, yeah, I'm in between doing the comprehensive course or the $250 4-day course. If you sign up for the $250 course, we immediately deduct that from the 12-day class in case you do end up taking that. So that's not something you guys need to be worried about. We record each session. You guys get the 40-page little course guide. It runs for 4 days, starting up this Monday night, Monday, Tuesday, Wednesday, Thursday night. 60 minutes of class, 30 minutes of Q&A. It's going to be great. Pete is a very, very good teacher, as you guys will soon find out here in this webinar. So type into the chat if you guys have any questions, you want any more information on that, or you can sign up on MarketFi. I'll put that link in the chat. And without further ado, I will hand it back over to Pete.
What's going on, guys? All right, so check out the courses. We had a lot of good guys actually make it to our advanced course, which I'm really happy about. Again, we take that off for the advanced class too. So Neil, what I was saying is that yes, this recording will be given out to people later on during the week as well. Okay, so let's talk a little bit about the bulls and the bears and where we are right now. Okay. So obviously everybody has been kind of bored and kind of annoyed with this whole ramp up. Let's just go ahead and look at this whole thing without what happened yesterday and the day before. Okay, let's do this one more for that. Okay, so pretend that candle's not there. Okay, so prior to that candle, we have been in a serious buy the dip mode. All right, and what's pretty much happened is that this has sucked out a lot of the volatility and a lot of the game for breakout traders and breakdown traders. Breakdowns are not lasting long enough. Breakouts aren't really working, and all you can really do is kind of throw a rock at a dip, and hopefully that's the right turn. This is not really the best environment for traders. Traders need momentum. Okay, traders need lots of volatility to be able to work in and out. So, our assessment for the past few weeks, I would say, even, I would say from March, 13th and on, is that this environment is not meant for buying mass breakout moves in the markets. Even though we are bleeding upwards, we still consider this consolidation. Okay. One thing you have to realize is that when you're in this market, this is the type of market that takes most of your money. Okay, and the reason why we say it takes most of your money is because you're trying to put risk on during a breakout or during a dip buy, and these things aren't lasting forever because a lot of the big funds and a lot of the institutions, they don't actually care about price during this time. Okay, they're working in and out of large positions from previous lows from here. Okay, and they're actually deciding whether this is a good area to continue buying or a good area to sort of peel off some profits. And it has been a pain in the butt. Okay, so the strategies we have been employing actually have been writing strategies. We've been writing strangles and writing straddles all across the board on puts and on calls. I was writing price line today that I got hurt on because I was on the wrong side of the tape today, which is like a freaking moron. But anyways, things that we want you to make sure you understand is the way that the markets sort of move and the way that the markets anticipate information. Okay, so let's go ahead and bring in these two candles. Okay, so yesterday was pretty much our awesome, amazing move to the downside. The first day that the bears actually really gave a crap at all. Okay, we were able to trade all the way from 157 down to 155. A very good show for the first time in a long while that the bears are willing to put some money on the line and to take some action here. Okay, what's really been unfortunate is that while I would say bulls have been taking profits at the top or not putting on more risk, the bears have not been in force. Okay, so even though we got this dip, this first day dip, this does not necessarily mean, oh, we're bear market on. Okay, we're still very much in an uptrend. Do not get this wrong, guys. All right. But what the things that we need you to understand is where you need to be putting your risk on and things that are working and are not working. I was actually hanging out with a couple traders last night, and one of the strategies one of the guys was talking about is that he's going to continue buying the dip until it stops working. Okay, yesterday was one of the first days that buying the dip stopped working. Okay, the turns were no longer the turns that were expected, and we started becoming into a bear tape. All right, and another thing that really lent, sort of a precursor before this was the financials. And this is what I tell my guys in the chat room. Make sure to check out the chat room. Is to make sure you guys can watch the big banks. Okay, the big banks are always leading the markets. So let's check out Goldman Sachs real quick. Look at Goldman Sachs. Goldman Sachs has been fading this entire time after that peak move to 158 back in February. Okay. And this has been a very slow trickle down, but the markets haven't been responding that well to it, okay? This is actually considered more of a consolidation. If you want to take a look at it, if you were to draw a trend line from, say, the 156 area down to 146 here, if we were able to make it out of 146, this would actually be a very good setup for a long to retest back to 154 and ultimately test the new highs, okay? Now, that might seem like a long shot, but what you should understand is look at the way the rest of the banks are moving. Okay, look at Citigroup. Look at JP Morgan. Look at all. Citigroup was the first one yesterday. This was the first big tell. Okay, JP Morgan and Citigroup yesterday were the first big tells that JP Morgan wanted to make that first roundup and be one of the first banks to actually consolidate out of this downward channel here, but it was unable to. It made the fake out and actually dropped tremendously. Okay, this JP Morgan yesterday, I was actually alerting to a lot of the chat room members again, was that this was the biggest tell during the day that we are in a bear tape, okay, that we should have not been, nobody should have been looking for dips. They should have been, shorting the rips. Okay, Citigroup, the same thing. This also wanted to round up the consolidation downward here and try to get out of the 44.5, 45, and was not able to do it. This day on, I think this was Monday or Tuesday, it tried to consolidate sideways a little bit more and try to make the ramp, but it couldn't do it. Same thing with JP Morgan, just like we showed you. JP Morgan also tried to make the move. It actually showed it a little bit, and it was a huge head fake. And now, we're trading much lower, and we're actually looking at, sort of a very important crux and pivot point within the SPYs and within the markets in general. So if you want to take a look at and kind of understand where big money is, okay, big money cares a lot less about price than you do. Okay, we as traders, we have to really care about where intraday prices are. Okay, we have to care about, you know, where the turns are to get a little bit of momentum to the upside, you know, where the breakouts are, all that kind of stuff. What you need to realize is that big money, when it flows in and out, you know, they trade within VWAPs. They trade within large volume pockets, okay? Meaning that you have to understand that 155 is the major level here for big guys, okay? This is still the line in the sand for bulls. You know, I could even say that 153 was the line in the sand for bulls because, you know, this was all, you know, post QE. This could have been where they had taken profits, and this can be a whole new consolidation area, okay? And again, what you need to understand is that although you may see that, you know, a lot of things have been breaking down or have not been working as well, that might just mean a little bit of profit taking from the bulls, but that doesn't mean that the shorts are in. You know, that doesn't mean that there's anything really going on, you know. For instance, everybody thought that, you know, the initial shorts were going to start coming in around here because of the Cyprus issues. Well, those shorts got burned pretty badly as we went for new all-time highs up to 157 and a quarter, I believe, and onward. You know, I still think that today's action actually was more indicative of the bull case than the bear case. So I'm going to make a bet sort of here. I know we've got a lot of numbers tomorrow, but if we can make it above 156 and a quarter tomorrow, we're going to be on our way to testing new highs very, very quickly. Okay, this might have been the dip buy of the month, possibly. Okay. You know, again, you know, we are still maintaining trend, and we're still maintaining key levels of 155. Okay, yesterday was the first attempt by the bears to really push lower, and they were not really, they weren't met with a lot of opposition. And today, 155 was defended like a champion. All right, we had a push in the morning. Look at this ramp in the morning, okay? And everybody, like in the chat room, I was telling everybody, make sure to watch out for the fade because this move this morning was too vertical, all right? When you have such vertical movement, what's actually happening there is that the offers are being lifted. It's not really buying activity. It's just a bunch of offers being lifted. And when that happens, all your general prices are going to rise a tad bit. But, you know, what's happening is that the bears and other, you know, traders, professional traders, are looking for this top to fade the entire movement, let it ramp a little bit, and to continue fading, okay? And the real tell today was that, again, we got right back down towards the 155 area. 155.10 was very well defended throughout the entire rest of the day today. And today, I would say both sides had a chance to really understand that this was an inflection point in the markets, and that bulls and bears both had a chance to make some good money today, all right? And when I mean good money, is if you look at Apple, you know, today's Apple move was a great time to go short and a great time to even go long for a little bit, all right? We can even look at the price line. This is what we're playing in price line. So great short off the morning from the 700s all the way down to 685s, and then it ramped all the way back to 702, all right? Let's check out the Citigroup. Citigroup. Great long off of the morning drive. Obviously, we got a little bit of a dip, and then we were able to catch a bit of a long here, and then we were able to fade the whole entire thing. You know, I was leaning on the short side because, again, I'm looking for the bigger short here with Lucci, but in general, there's plenty of space today to really scalp back and forth. The main thing you had to be careful of, though, is if you held your position too long, okay? And this is another thing we made sure to tell a lot of our guys in the chat room, do not hold your freaking position that long today, all right? Again, you know, it was an attempt by the bears to really push it a little further, but they were not able to make it that far. Things that you want to watch out for, again, is that we might go dead again tomorrow, okay? Because a lot of people are going to be like, okay, this is a big dip buying opportunity. I might be able to buy some cheapy, you know, Friday expiring options and be able to swing them out a little bit. That may not happen at all. We may flatline for our next couple of days because this big move, if this big move really is the digestion point for the bears, what's going to happen is that we're going to end up finding some more catalysts in the next few more days to actually push this a little further. If not, you know, the jobs number tomorrow, I think we have ADP as well. It's going to help push us up and continue the bull rally, okay? So in general, I would say that we're sort of in a this is sort of like the New Year bull market, okay? The New Year bull market is not for bull traders, okay? The New Year bull market is for those who are understanding the dip buying mentality and who can sell puts in general, okay? And again, selling puts has worked out great for many, many people. It worked out great for us all the way until yesterday, all right? Yesterday was the first day you could take an actual short and be confident in the short throughout the entire day. It's been a long time since that's happened, all right? And that short, what I want to really hammer into is sort of the Netflix trade, okay? The Netflix trade was a short that we had been looking for a while, all right? So let me make sure that we can see everything on the right time. Okay, so pretty much, we were looking for a short off of this 190 level, all right? The 190 level pretty much was unable to be broken down into, was unable to hold itself on March 27th, okay? And pretty much the tape had indicated to us that this was already time for this big short, okay? And I know a ton of people that were like, oh, no, it's not going to be a short because the 185 is going to be supported and it's going to bounce, okay? Yeah, all right, we want to sell to all you guys, okay? And that's what we did. Ultimately, what happened was that 185, we actually got shaken out of this trade. We actually had about, I think, 650 contracts of the I think the 180 put from the day before. Okay, so we had only capitalized about, I don't know, maybe 20 or 30 grand on this trade, but the follow-through afterwards showed us great, tremendous gains. This could have been a $250,000 trade easily, without a problem, okay? And again, what we were able to watch is that the markets in general were starting to put in a top, just like I was saying, and we timed it well with the tape of Netflix itself, okay? The buyers were stepping away, the sellers were coming back in, and we knew ahead of time. We knew through the 187 area that this 180 and the 185 were not going to hold up, all right? Unfortunately, again, we only able to make about 30 grand off of that. It wasn't our most glorious trade, but LinkedIn, very similar chart, was also showing the same sort of action, okay? So again, we were able to see that the markets were getting a little weaker. We were able to time a short that was very, very sweet, and we got heavy in it. Okay, we initially got in maybe, I would say, 500 contracts, held that overnight, had a little bit of a loss in it, and then added up to 1,100 contracts, and we're able to actually smoke out. Yesterday, we closed the day up about 330 grand. And then today, unfortunately, because we held about 500 contracts, we got smoked in the overnight hold and lost about 100 grand. But overall, this week we're able to make about, let's say, $200,000 to $240,000 so far on the week. And again, guys, this is the reason why tape reading is so important. There's plenty of liquidity in LinkedIn. There's plenty of liquidity in Netflix for you guys to actually get some of these bigger trades. All right, and especially when you can time the markets properly. We've been punting around stupid trades for the past 2.5 weeks. And my chat, they know for a fact, I know you guys are in here, you guys have probably been really freaking bored because we have been sitting around writing options for God knows how long, okay? Like we have been literally writing options on the outside of these wings on Priceline back and forth so much because it's just been pure chop. It's complete nonsense, okay? And again, we were able to stock a couple trades like Netflix and LinkedIn and be able to time it properly with the spies, okay? And now again, we took today to kind of take some losers. And again, the way you want to think about losers is that it's a cost of doing business, all right? And what we've learned is that today remains to be seen a very large transition period. Okay, tomorrow, because we have so many numbers, we have to make sure the bulls have to maintain 155.5, 155s, possibly 154.75. Okay, all these levels are very, very crucial for the bulls to maintain to continue upward. Okay, tomorrow, if we get any gap up, say towards 156.75, we're probably going to look to fade it again. Okay, if we get any gap down, we're probably looking to dip buy. All right, these are the pivot areas for where you guys need to be very careful on selecting how you trade and which horses you are picking. Okay, I know so many people that were trying to go long this Apple for freaking God knows how long, like 3 or 4 or 5 days. Not be able to get it anywhere. And I told them from the 460 area that this is only a short on the rips mode Apple. Okay, there's no buyers in this. All right, I could see this under 400 in the next couple of weeks if they don't start releasing some catalyst moves with their dividends. Okay, and that's very dangerous for the long buyers. Okay, this move today was really nice from 425 up to 430. But again, it's relatively difficult to catch such a parabolic move twice here. I don't depend on trades like that. Okay, and again, like the things that we want to make sure that you understand is that whether or not we're in say, a semi-hybrid bull bear market, or if we're in a chop market, which I still consider we're in a chop market, or if we're in a bear market or bull market, is to understand that you can employ option strategies across the board, okay? Especially with the advent of mini options out there, there's plenty of spread trading you can do. You can write a lot of call spreads, which we did do this entire time, okay? On the way upward, we are writing call spreads because the calls actually had a lot of premium. A lot of retailers were just trying to buy calls outright, not understanding what the hell they were doing, and we were writing to them the entire time, all right? And when the tape actually turned bearish, we're actually able to take a net long put position, okay? We're actually able to take a solid, I'm just going to go long a put and count on the continuation on the day. We're able to bank that trade out. The Netflix trade, that was an option that went from $2 to $15. The LinkedIn trade, I'm not even sure the numbers on it, but I think we traded it from like $1 to $5, like 140 to about $5. And again, like there's plenty of trading to be done during all environments. Okay, and what you need to assess is that if you're in this choppy, weird moment of like kind of chop upward movement, it's not necessarily the best time to just be outright buying calls. Sometimes it might be better to sell a put instead. Capitalize a little bit of time decay, capitalize on a little bit of volatility bleeding out of the markets, which it had been the entire time. This bear move was fantastic. And if you were able to recognize from the beginning, from the day before, just like we did with Netflix, that the bear tape was slowly forming, you would be able to capitalize on going a net long put position. Okay? So again, guys, what you need to understand, what we're trying to get across to you, and again, what we're trying to teach you in our classes, is that you should really try to understand to employ certain strategies during certain market times. Okay? If you see that we've chopped around so much today, you should not trade. If you don't have the capital to write options on a Thursday or a Friday, don't trade at all. Okay? These are times for you to really not do anything, okay, for the smaller traders. For those of you who understand how to play the minis, which we will have further talks about in the future, or playing options in general, you should also understand, when is a good time to be writing options. Chris Viles today in the chat room, actually, he did better than I did. He was writing Priceline yesterday on the what was it, the 705? Was that it? The 715? I forget, but you were playing the 715 line, writing it the way down. As we knew that the bear market was the case yesterday. And again, like make sure you guys understand when to trade, when not to trade, and which strategies to put in. Okay. And what we've been able to really do is actually we've taken a whole ton of strategies, a whole ton of complex crap, and be able to put it in a very small basket of stocks that we trade. We only trade about 5 to 8 stocks now, and also use a limited number of strategies. Okay, we like to write decay, we like to write volatility during days that it's really choppy or during weeks that it's really choppy, and we also like to play long calls or long puts when we see that the tape is in our direction, and that's it. Okay, it's very simple. We've had talks about this in the past, that it's very important for you guys to not trade when it's not your environment. Okay, you do not want to make your life hard. It is not your job to try to pull money out of the markets every day. It's your job to pull markets, as much money possible out of the markets on the days that the setups are good for you. Okay, and that's one thing that, again, that's the major thing we want to address, is that whether it's a raging bull or some hiding bears, is that you have options. As lame as that sounds, you have tons of options, and use those options literally and figuratively to make sure you're mitigating your risk. You're either hedging yourself, mitigating your risk, or taking advantage of the non-movement or the nice movement throughout the day to capitalize and make sure you beef up your account and protect your gains. Okay?
Great question from Mark.
So, Mark, we got a question here. Being that tomorrow is an option expiration day and premiums get killed fast, do you recommend buying next week's weeklies instead of this week's weeklies? Yes, Mark. So, depending on the way you trade, so it sounds like you actually know what you're doing a little bit here. For instance, if I were looking at this Goldman Sachs and I was saying, if tomorrow is really a bear market, I'm not going to go and try to buy the 146 line. I'm actually going to try to buy the 148 a little further out, get it a little cheaper, suffer the decay over the weekend and know that this thing could possibly pop through 146 and give me some premium gain for next week. But if you are unable to stomach sort of the losses and sort of the worries of an over a weekend type of trade, you should probably just write the other direction, okay? Because again, writing allows you a little bit more massaging and a little bit more leeway in terms of where the stock has to go. But yes, you're completely right. Because the decay is so extreme on Friday, you guys have to be able to catch the move within the first 15 to 20 minutes to actually be able to be on the right side of the trade and better be in the money relatively to not suffer the decay too much. Another worry there about decay is that spreads start getting worse and at the same time liquidity dries up. That might not be a problem for a lot of people out there, but for us it's a serious issue. So that's why a lot of times on Fridays we're just riding all the out of the monies because the risk there is relatively much lower than trying to chase after some big move. And again, as we spoke in the past, the pinning phenomenon, just like you can see this Goldman Sachs here, the pinning phenomenon is because of the weekly options, because of all the action in the options. There's so many big guys selling on the outside that the value gets freaking pegged to a one price, so all the retailers are chasing up and chasing down these moves that aren't actually going to come to fruition.
All right, guys. Hey, this is your chance, man. You got Pete sitting right here. Any questions, just type them into the questions chat, and he will answer them.
Yeah, feel free to ask questions. I'm going to open it up to questions now. We pretty much addressed, where we are in the markets. So.
Anybody, come on, guys. You guys gotta speak up here if you want to learn. Man, I'm gonna start talking about classes and stuff again if nobody says anything.
Any other questions, guys? Did anybody trade anything today? Tom Bianco is asking about Apple. No, I don't think it's a bottom. Okay, I am still in the camp of that this is still a short the rips. Okay, I understand that everybody is looking at the 425 line and also looking at 420. I could see this thing gap lower tomorrow, smoking everybody who tried to buy the dip today. But no, I do not believe that this is going to be a bottom right now. I think it's if you want to play it for a scalp to possibly a 430 move, that's completely fine. But I do not overall. I'm looking for bigger moves than $2 or $3. I'd rather get a gap up to 435 and short the piss out of it. All right? Didn't you say Derek had a big trade? No, that was somebody else. Let's see.
Good question. Do you always recommend weekly over monthly options?
We like to play weekly options in general, Matt, because because of the way that the markets are so compressed now, we can get as much gain through a weekly option as through a monthly option. And I would honestly say that we prefer weekly options over monthlies, but if you are more of a swing trader, monthly options may be the better choice. In general, monthly options have not been paying out that great, but they have been acting as great hedges. All right. Let's see. MG, yes, the recordings will be available. Are we going to play any earnings in the next upcoming weeks? No, we are not. Okay, so one thing that we teach in our classes again is the proper way of playing in front of earnings. All right, so unfortunately, there are still traders out there that try to chase earnings. I don't understand why they do this anymore. Even if earnings are great, guidance is great, revenues are great, PE is great, you could have a giant dump in the actual stock, okay? And you could have a giant bump. It's a freaking crapshoot. All right, you'll never know 100% because again, the markets know ahead of time. They're pricing ahead of time where all this is. Okay, there are insiders all the time playing, and you should be very careful, especially if you're playing options, trying to play in front of a lot of these options. Okay. Let's see. Another question. Tom, can you ever tell early if pinning is actually happening, or will it happen in the next couple hours? Love to read more on your thoughts about it. Tom, yes, you can always tell a little bit earlier in the day how prices peg. So unfortunately, I can't pull it up. But for this for this instance here, I believe this was actually what was it, 28th? Thursday, yeah. So Thursday, we were actually able to tell the pin was actually going to happen way earlier in the day. Okay, even while the markets were moving, we were able to tell the pin was occurring. And again, these are more advanced topics that we do talk about in our courses. If you're looking into that, shoot me an email. But again, we are able to tell, I would say within the first 30 to 45 minutes, the relative areas that the price is going to get pinned. And then by noon, we actually have a very good idea of where the price is going to get pinned, especially on Apple. Apple is a notorious pinning stock.
Scott, you've got a pretty good question. When buying weekly options, how do you decide on what strike to buy? Pete can give a little bit of an answer to that, but that is really one of the things that we teach very well in Introduction to Options class. But Pete, yeah, jump in there and take that for a second.
I didn't even hear the question.
When buying weekly options, how do you decide on what strike to buy?
So that's an entire class by itself, actually. So it's complicated. We have a way of determining where the current price is, what levels that we're looking at, what day it is, and be able to assess all those things relatively quickly and be able to pick out a strike price. But strike price selection is probably the most difficult part of most traders, especially with smaller accounts or those that can't average in multiple times to actually capitalize on a move. So I'd like to tell you that, but again, that's a long freaking discussion to have. Again, if you have questions on it, feel free to email us that. So Tom's also saying, doesn't big money know everyone is in short? Apple waiting for the 419? Tom, no. I personally believe that I think everybody's looking for the dip. Everybody's been looking for the dip buy in this Apple, and I don't believe that it's there. This is the time for real big dip buyers to come in and buy this up, and I don't think it's going to happen. Maybe for a dead cat bounce, it's possibly 440, but I think this is still going to keep going. I want to see 400 on Apple, guys. Do you consider delta or gamma when choosing your strike? Valhalla. So that's a relatively advanced question. In general, we do consider delta. We don't necessarily consider gamma. We actually like to sell into gamma. We are more delta gamma traders here, but again, that's more advanced stuff we're talking about other classes. Our options selection, we actually have a proprietary way of determining which strike we should be in and how to play them.
Any more questions, guys? Keep them coming. Keep them coming. These are good.
Do I recommend using mental stops or actual hard stops? Okay, so Mark, mental stops is definitely the way to go. What you should be careful of is that hard stops, you should never use hard stops anymore, especially if you're trying to play these bigger names, all right? High-frequency traders and market makers are out there to sniff out standing orders. You don't have access to advanced order types, and because you don't, your orders are out there in the markets for every market maker to watch, okay? And if they feel like it, they're just going to ping you when there's no liquidity, all right? Don't fall into that trap. What about the PMs? Got to turn at some point and should be a nice move. I think you're talking about Apple. Yes, there's going to be a turn in Apple. We can consider arguing this. Do you want to bet a beer? Because everybody out there, I will bet everybody out there, okay, within the next, if we don't have a catalyst with the dividend, I will make this bet. Anybody out there can call me out. Send me an email, Lucci at Sang Lucci. I will send you a beer to your house, okay? I will make a bet that if we don't have a catalyst of the dividend catalyst or of some ridiculous catalyst, I'm talking about a big catalyst, okay? If we don't have a big catalyst, we're going to see 400 before we're going to see 455 or whatever, before we see the big roundup in this thing. Okay, I'm saying that this is not the bottom yet, all right? Let's see. How do you see at open interest, how much is short seller and how much is real call buyers and put buyers? Vitka, it's a very complicated question. So this comes down to a tape reading methodology, and it's more important for you to understand, the aggressiveness of sellers in the stock and aggressiveness in buyers in the stock. Okay, just like this LinkedIn and in the Netflix, we were able to tell days ahead of time via the stock that this was actually a bear play. Okay, that we were able to hold this for multiple days. All right, same with the Netflix here. All right, and again, so this is a form of tape reading that takes a lot of time to learn, but again, it's in our advanced course that we can talk about here. When you are in a big trade, are you watching the at the prices with large volume spikes on 1 minute to become support areas? Rocky, we look at the price all the time. Okay, we don't look at. I mean, we watch the charts, but we're more concerned about the tape. Okay, the tape is the level 2 and the time and sales. We're watching that like a freaking hawk. Okay. Okay, let's keep seeing other questions here.
Keep them coming, guys. If you guys have any questions about the classes or anything like that, anything generically on options and playing on bulls and bears markets, keep them coming.
Okay, Chrissy, you're saying, what's your confirmation that you shouldn't be buying the dip? Sounds messed up. Okay, tell me what exactly you're looking for. What are you asking from me here? What's messed up? What do you need? I know this varies with individuals, but what % stop do you recommend? Mark, I would say that it really depends on how much your account you're putting on. Again, with options, depending on the way you utilize them, if you're going just long options in general, you have a finite and a defined a risk parameter. Okay, so if you put on $100 on a long call, all you're going to lose is $100 maximum. Okay, but depending on the way you trade and depending on the liquidity, it could be different. I would say because of the exposure issues with options, you'd have to make your stops a little bit wider, and again, probably go in a little bit less size than you're used to on an equity, and be able to size in a little bit more through the options. Okay, so I never know if it's a legit pullback or if it's a short. So again, Chrissy, that's a great thing, and I didn't mean to sound like a jerk off when I was saying, "What are you looking from me?" But so what's really important for you to understand, SPY, is that it's very, very difficult to look on a micromanaged point of where the tape is on the SPY. Okay, a SPY again is a forward pricing, and it's a discounting model. Okay, it's always looking into the future. It's always discounting everything in the past all at the same time. Okay, because there's so many players in it. So what you have to do is that you just have to be able to assess where are my big major levels. How is my tape looking at those levels? Do I have lots of buyers there? Do I have lots of sellers there? How many days of repetition do I have at those levels? Okay, and then what you need to be able to do, like we teach in our classes, I'm giving you guys a lot of information here, is that you have to look under the hood. How have your stocks been acting? How have your NASDAQ stocks been acting? How have your financials been acting? How have your casinos been acting? Okay, and you have to be able to put together a thesis based upon how the indices are working, and then on how the underlying is actually working. How are you able to actually justify a giant market dump when, say, the casinos are up 3.5%? Okay, those are the last places that people want to put their money if they were actually trading. All right, and again, these are things that you have to assess on a day-to-day basis, week-to-week basis, to be able to say to yourself, is this an actual short or is this just BS? Okay, and a lot of times there's a lot of hindsight involved with it, but what's really important is for you to be able to assess it objectively, and also think about where the big money is and where they're going with things. Okay, let's keep going here. With so much HFT activity, how much info on the level 2 is real? Scott, so what you need to understand is that you need to say to yourself that all the activity on the level 2 is real. Okay, whether it's HFT or not, and it's up to you to interpret and to understand what is going on with those HFT quotes and what the hell is going on there. Tape reading has become much harder because of HFT, but it's not making it impossible. Okay, it's actually, it's actually made it slightly better for those who can actually tape read better, because they can actually size in a little bit more at better prices, because the HFTs are going after the smaller players. But yes, it's very difficult with HFTs. You have to be able to adapt to the way they trade and be able to adapt better. Human brain is the most powerful parallel processing computer out there. There's no computer that can match to it. All right. In the end, you can create as many systems as possible, but it is your job to put on the risk. Okay. And for you to assess the risk on a macro standpoint, you are acting as a portfolio manager of your own portfolio. Okay. You are making these decisions. The HFTs are in there to game you in between, back and forth, back and forth. So if you're able to look a little bit more objectively, you'll probably make some better decisions than the HFTs themselves.
All right, guys, we're going to do one last question here, and then Pete's got ahead.
Okay, Wesley's asking, do you hold options overnight or rarely? I would say that we rarely hold it overnight. So what our cream or our bread and butter, or our perfect setup, the perfect storm for us, is that we see a real move on the tape, we time it together with the SPY action, and what we're able to do is trade an out of the money option all the way so it's in the money, and have it go even further in the money the next day. That's our best setup. All right.
All right, guys. We got to call it. But these are great questions. This is the kind of stuff Pete and Lucci don't like to talk themselves up, but they have been mentoring and guiding traders through these sorts of questions for the last couple of years now. They're very good at what they do. It's the reason that we run classes. It's the reason that we partnered up with MarketFi, and we were some of the first ones that partnered up with these guys, because Pete and Sang are very good at what they do. So join into his chat. We put the links down in the chat room. He's in there every single day teaching you guys, answering the exact questions that you put in there. And then, the new class starts Monday night. It's only $250, man. That's a lot of information for $250. You can make that back on half of a trade. So definitely get in there, guys.
All right, guys. Make sure to check us out. Email us, Lucci at Sang Lucci. We're all around. All right, guys. Have a good night now.
Have a good one, guys. Thank you.